Ladies and gentlemen, today we're going to be talking about 6 real yield crypto assets that pay an annualized yield, APY, APR, of 10 to 15% on the low side, all the way up to over 90%, 94, 95% APRs. I'm going to show you specific projects in this video. I'm excited about this because some of these projects most people have never even talked about. In fact, the best project here that I'm going to share with you today, literally no one has talked about it. And I recently found this when I started looking at real yield cryptocurrency projects. The very first projects I ever looked at were companies that were paying a dividend in Bitcoin, but they were paying small amounts. Like, we're talking about 2015, and we're talking about companies that were paying like 1 and 2 and 3% annually in Bitcoin. Well, that's really not even worth it. You can go to, some sort of traditional investment. You can put it in a dividend stock and earn 3% a year and use that 3% to buy Bitcoin if you want it. That's a better investment. Let's go ahead and get into these 6 different projects coming from 6 different market sectors, all inside of cryptocurrency. The very first time I realized that people didn't understand the type of earnings that we could earn, I put out this video series, free video course, reveals a little known method to earn $1,000 per day. The short version is this is a video course which is still available. You can go down and subscribe in the description, but it essentially talks about how you can take a project with a real yield of over 90% that's paying you every single day in profits in Bitcoin and Ethereum, BNB, Tron, etc., and how you could grow that to potentially, hypothetically, be $1,000 per day. And when I put out this video course, I was talking about understanding the risk, how to mine the token, how to earn with the token. I broke down every single thing in this video course. Like I said, you can go down in the description and subscribe to it. But some of the emails I got, people were shocked. They did not know this even existed in the cryptocurrency space. It kind of blew my mind, and I started looking around at what else could be out there that people are not aware of. So we're going to start going through these projects, and each project that we go through, I'm going to start on the low side. They're paying out over 10%, and we're going to go up from there. Each project paying out a little more from the project's actual earning. All right, so the first project we're going to be looking at is GMX. So GMX, this is what the main page would look like. GMX is allowing people to trade options. We're talking about buying and selling calls and puts, essentially. Something that happens in traditional finance all the time. But they're doing it in a way that is decentralized, using the blockchain. Now, with this particular project, the fees, if you stake their GLP token, you can earn fees. Fees that you earn, the APR that you're going to earn, is down here, 19% APR, of which 16.21% is used in wrapped Ethereum. So they're literally paying out 16% APR based on the fees that they're earning from the platform. 16% of the 19% of your APR is wrapped Ethereum that you can withdraw. You can use it right away. The other 3.3% is this GMX token, which gets staked for a year and you can earn over there as well. And some of that gets paid out in Ethereum as well from fees. Now, I'm not going to break down any of these platforms and go into all the details. I just want to show you what the platform is, how you can earn on it, and what the earnings are. What are they paying out in? Next up, in the exact same sector, it's hard to talk about GMX without talking about Gains. Now, Gains is on the Matic network. They do have a small inflation rate, by the way, of 4% a year, but they have a couple of different pools here. I don't want to get too complicated. Let me just switch to Matic so you can see this. My favorite pool here would be the DAI Vault. The DAI Vault is essentially the insurance pool for the protocol, but it's paying out 13% right now at the time of this video. It has paid out as high as 15% or more. I've seen it 14, 15%, but it's literally paying out in DAI, a US dollar stable coin. So you can stake your DAI over here in the protocol, and you're going to earn DAI with the protocol as well. And of course, that DAI is coming from fees. Ladies and gentlemen, think about that. You're earning, there's nowhere in traditional finance you can get 13% APY. Nowhere at all. And it's coming from, they can't obviously print DAI. They're not MakerDAO, right? They can't print DAI. You're getting paid from fees on the platform. That is extraordinary. Now, they also have this pool over here for the GNS token. However, 4.74% of that comes from trading fees as well. The total project has 4 point. And of course, there's 18% here. You have to provide liquidity token. That's an LP token. If you don't know what providing liquidity is, you don't have to worry about it. But that's another video for another day. Right here, 13% in DAI. Stake your DAI on the platform, earn 13% APR, APY. If you believe in the project, then that could be a potential investment for you as well. I've not ever invested in GMX, full disclosure. I have invested in Gains. I'm not there now, but I have invested in them in the past. Next up, we're going to move over to the NFT space, and we're going to talk about getting some more Ethereum. And of course, we're going to see these numbers keep going up. So this is LooksRare. So LooksRare is a platform that competes directly with OpenSea. I have talked about LooksRare before on this project. I did lose a tremendous amount of money with the Looks token. As you can see, the price of the token has collapsed. Part of this is the bear market, and part of this is over the past 180 days. Part of it's the bear market, and part of it was inflation from when the project was very, very new. So I think it's a combination. But as we can see, it looks like the price is stabilized quite a bit. And this is a project that I'm paying attention to be honest. This is a project that I could be going back into in the future. And this is why. I believe the NFT space is going to grow. I don't necessarily love NFTs as a whole, but I do believe the space itself will continue to grow. If it continues to grow and you like Ethereum and you believe in the NFT space, then the rewards that they've got are pretty good. You're able to get standard staking. Just stake the LooksRare token, and you're able to get right here 27% in Ethereum. In Ethereum, 27%. And that's coming from fees collected on the platform. They're not creating Ethereum. Now you get 17% LooksRare token. That is partial inflation, obviously. But 27% is coming from the freaking fees on the platform. That's incredible to me. So I'm going to continue to watch this project for a while personally. I'm not currently in. Again, I have been in the past. I've done videos on this project in the past as well. So we've got 3 down, 3 to go. And we still have my favorite project coming up. Next is not my favorite project, but it's an interesting project. It's Synthetix. So Synthetix is creating derivatives on the blockchain, essentially. What that means is, think about stocks, like being able to trade like Tesla or being able to trade Netflix. Having a tokenized version of that tracks the price and being able to trade it so you can benefit from that stock price going up or down by holding a synthetic cryptocurrency asset. In a nutshell, that's essentially what Synthetix is doing. Now, Synthetix pays out in their Synth token, their own token. Their token used to have a significant inflation rate, but they, through their DAO, the governance, they put forward some governance proposals, which is good to see decentralized mechanics in action. And they have decided to drastically lower their inflation rate. In fact, I think it's going down by 1% per week. Their inflation rate is going to be 2% per year. I believe it's by, I think it was November of 2023. So the inflation rate is dropping significantly, which is really good. But you can currently earn on the Ethereum chain. They're also on Optimism. Currently, at the time of this video, Optimism pays about 30%. But on Ethereum, they're paying 40% right here. 43%. And now again, they pay you in the synthetic token, but the majority of that 43% is coming from actual fees and revenue collected on the actual protocol in and of itself. So this one, again, in the financial sector, but it's a little bit different, looking to create Synthetix on the blockchain. Very interesting project. I recommend you check it out, learn more about it as well. Now, another project that I like, I've been in before, we're talking about PancakeSwap. I've done videos about this as well. The problem in the past with PancakeSwap is it had significant inflation. But take a look. They made a change. As you can see, by the way, I think PancakeSwap proves this more than anything else. As the blue line is their circulating supply. As circulating supply goes up, price tends to go down. What happened the moment they stopped increasing circulating supply? We see that price leveled off. Here's what's interesting with PancakeSwap. They use fees to be able to buy back and burn the token. So you're benefiting from the fees of the platform. So they do still pay you out with an increasing circulating supply. I don't necessarily love that personally, but they're using their fees to buy back the token and burn. So as you can see, it's causing the price to slightly go up. And all these little humps that you see here, the little blue line, that's them buying back and burning the token. Buying back, they do it regularly. So as long as PancakeSwap continues to perform well, they're currently the biggest and best exchange, I guess you can say, on Binance Smart Chain. And they've currently went over to Ethereum, and they've went to the new blockchain, the Aptos blockchain as well. So as long as they continue to do well, then the token's probably going to do well. But they're paying 60% APR. Check this out. If you come to trade, you go to earn, pools, 60.84% APR or APY. Now, the key to this is you have to lock up your tokens for 1 full year. In our invite-only Telegram group, one of our whales in there locks up for a year every month. He really believes in this platform, has thousands and thousands and thousands, probably tens of thousands of dollars in this platform, if not more. And he's the one who actually showed me that the increasing supply leveled off from the buybacks and the burns. I'm probably going to keep watching PancakeSwap for a while longer as well. I don't like that you have to lock for an extended period of time, but the thing about locking it up is it does help control the circulating supply as well. And you're earning 60%, so that's pretty interesting. And you're locking up for a year. A project like PancakeSwap, I mean, they have a multi-year track record, but it's not like we expect them to disappear next year. So this could be one to look at as well. Again, they're benefiting from the exchange fees. PancakeSwap is probably in the top 3 or the top 5 of total revenue generated. They generate a ton of revenue, and of course, you're using a significant portion of that revenue to buy back their own token and to burn it. If the circulating token supply stays level, then this 60% APR can be really, really juicy. Now, the next project I'm going to be talking about, this is a project that I highlighted in this video course. It pays you out every single day in Bitcoin, Ethereum, TRX, USDT. It's unbelievable. Today, if you were to start to mine the token, you would probably be earning a little over 90% APR. We'll do the math and look at it here in a minute. What I'm talking about? I'm talking about the STARS tokens. This is a gaming platform. However, obviously there's a lot of players playing, and this dividend pool comes from players and their losses. So if you've ever wanted to, be a casino mogul, this is essentially your chance to do that in part. Project. So I've mined 1.5 million STARS tokens. And the entire free video series down below in the description, it's all about this, at least the first part of it is all about this project, the first several videos. In that video series, I go over the risk, I go over mining cost and how to calculate your mining cost, how to manage your risk, your ROI, how to calculate your ROI, all the things, like literally everything. How to save money that people don't necessarily talk or teach about. Nobody's talking about this platform. Listen, I get paid every day. Right now I'm earning $22.82 right now. Tomorrow, that's what I'm on track to earn based on this dividend pool, based on how many tokens that I currently have. How much did it cost me to mine these tokens right now? Well, let me just prove it to you. The current mining cost for tokens is half of a cent. It's 0.0055. So multiply that by, if I were to start mining today. Now I started mining earlier. You got to understand, every few days, essentially, the mining cost goes up. Every week or so or two, the mining cost goes up. So I started mining a little under $6,000 worth of these tokens from the very, very beginning, about a month and a half ago. Right now, if you were to start mining, though, it would cost, let's see, 1, 5, 7, 6, 6, 8, 2 equals. Right now, it would cost you $8,671 right now to mine these tokens. So if you look at what are we earning right now based on this dividend pool, we're earning $2,000 a quarter. So let's just take a look at that. 86.71. Let's try to remember that. 86.71. So 25.4 times 4. That's $82,000 a year. Let's divide that by, I think it was 86.71. 86.71. This thing currently, if you were to start mining today, you're talking about earning a 94.75% APR, getting paid daily in Ethereum, Tron, Bitcoin, BNB, and USDT. That's incredible. Now, just so you know, because I started mining earlier, because obviously the earlier you start mining, your mining costs are cheaper, essentially. So let me just show you, for example. So I got in, what was that total cost there? What was the total earnings? 2,054 times 4, because we got quarterly here. I probably mined for, we'll say $6,000. It was probably a little less than $6,000, but we'll say $6,000. I'm literally earning 136% APR. 136% APR. That's incredible. Where else? And I'm getting paid in Apex assets. I'm telling you right now, nobody's talking about this stuff. Absolutely no one is talking about this. If you want to learn more about StarBets, go down, subscribe to our free video course series. By the way, 2% gets paid out every single day. 2%. So this right here, this is only 2%. And this continues to trend upwards. It goes down and it goes up. It's been trending upwards since the project started, since it launched. And when we have a bull market, think about the fact 62,000 is in USDT, but everything else is in BNB, Bitcoin, ETH, TR. I mean, if the next bull market, if we see prices double, triple, quadruple, What do you think is going to happen here? What do you think is going to happen to our APRs? It's going to be unfreaking believable. All right, so today we've covered 6 projects that pay in real yield. 2 projects, both GMX and Gains Network. Both of these projects are paying real yield in the finance market, allowing people to trade options in a decentralized manner. LooksRare is paying real yield in Ethereum, and they're paying it by being an NFT marketplace. Synthetix is also paying a real yield. Majority of that is a real yield, I should say. And Synthetix is doing that by creating Synthetix assets that can be traded on the blockchain. And of course, we talked about PancakeSwap, Bitcoin. Obviously, that's a DEX, making an incredible amount of fees there as well. And finally, we talked about StarBets, ladies and gentlemen. Let me know your favorite real yield project. Don't name some trading bot that can't provide not one single trade. We're talking about real yield projects. Let me know what your favorite project is down in the comments. Ladies and gentlemen, thank you so much for watching. Decentralized cryptocurrency equals freedom. This is Crypto Wealth. I'm out.